Hello, welcome to the Wealth Transfer. My name is Terry Saka. It seems shocking because we've been in such an expansion for so long. I don't think we really know anything else, especially for the millennials. Kind of feel for them. All they've seen is money printing and expansion. So is the cycle of the stock market actually topping out, or the bonds, or the global economies? Well, stay tuned because we have really insightful graphics and information that will show you where the cycles are. It's up to you to make that choice of what you want to do with it. But before we get going, I do want to let you know where you can reach us. CornerstoneAssetMetals.com for any gold and silver business, or if you like to watch the television programs. I do like Instagram, so go to Cornerstone Mint for the Instagram handle. There we have the nice 1-minute videos as well as great graphics. And then, of course, I do want the YouTube. Of course, go to Wealth Transfer Television on YouTube. And for those that have not maybe subscribed yet, hit that subscribe button and that bell to get notifications. We are going to change up our 30-minute platform, start breaking these videos up a little bit more, so there'll be a lot more, I just guess, easier to digest. It won't be so long. So please go to the Wealth Transfer Television and visit us there. So with the expansion and what we're dealing with the expansion, it comes down to the central bank's money printing. And then it comes down to, of course, just the amount of leverage that has gone into the system. So I'm going to jump right into what we call the momentum index. Now, in this momentum index, you see on the left, in the middle, and on the right. Now, for those that have been watching the program for some time, you realize, or you've noticed, that we constantly are bringing the patterns of the 9/11, basically, 2000, and then the Great Recession of 2008, and then what's going on today, because they're very, very vivid cycle patterns. On the left here, you see at the very top that arrow. That's the momentum index starting to slide. And once we got that pattern secured, we noticed there down below, the market actually took a dip. Took a little while there, took a few years for the market to bottom out. That's what happened into the market itself. And then, of course, in the middle, we had 2008. And then here on the right, where we are today, lower momentum again. Now, mind you, it's not about the stock market exploding back off these crashes. It's about the momentum. And we're starting to see where the momentum is shifting. Now, I understand charts. In charts, you know, it's all past. And as they would say in the financial world, that past results are not indicative of future results, right? But the patterns have meaning. It doesn't have to be perfect, but it can tell you when a cycle is starting to get overheated. And we do notice, now back in the spiritual side of things with Jonathan Cahn, we all hit this thing called the Shemitah, which was that 7-year cycle. Now, folks, we did actually have that, by the way, in 2015, but there was an extraordinary Luciferian money printing and debt issuance in 2015 in such a manipulative way that they really perverted the actual natural correction cycle we probably should have had. We've had an additional 3 years added to this expansion. And unfortunately, we're 10 plus years now into this money printing and expansion globally. 180 trillion in debt added and so forth. So we are getting close. Now, the key is for investors, if we're at that high of a cycle, what's next? Well, that's where you need to reevaluate, of course, and being diversified is paramount. Now, we've had the stock market come off over 10% and then keeps crashing back through those support lines, bouncing back up. The volatility is enormous. Bottom line, the indicators. So I want to get into this and show you where we're going with these indicators, because let the cycle speak for themselves. This one is the United States corporate debt to GDP. Now, I like the corporate debt to GDP because it shows the cycles here in 1990, 2000, 2008, and today. And if you notice the red circles and the peaks there. Now, each one had a specific cycle. In 1990, it was a credit cycle. Then, well, they all were credit cycles, but basically, they each had their own reasoning, whether it would be the housing bubble, whether it be the dot-com bubble, and then, of course, today, we call it the everything bubble. We just know that this is a credit cycle peak, and I've showed this a few times, but there's a reason for that. As we've expanded into these levels of credit, do you notice what happens right after it? That's right, it collapses down. Now, as it collapses down, that's when the markets correct. That's when your values go down in your portfolio. That's when you realize my account was 100,000, now it's worth 60, 50,000, because the credit contracted. And that's what the Fed is faced with today as they're grappling with raising these interest rates. And you're going to see more data that'll kind of show interest rates to be kind of a problem here. But the expansion of credit has a tendency to, well, let's just say it's like a bathtub. When you pull the plug, everything floods out. And we're seeing this happen right now globally. For instance, here, this is a survey. Now, it's really asking, what do you think the real economy is going to be over like the next 12 months? But this indicator is very unique because if you notice, it's not only trending down on expectations. So as these managers are saying, okay, we've been expanding for 12 years, this is what I see. We are getting near the lows of a 60% contraction on the opinion expecting on the economy, percentage-wise. That's not good, folks. As the cycles are showing that they're hitting a high, then the fund managers are saying that the cycle itself, they're expecting to be lower. 50, 60% is the bottom. That's a pretty big mark. Now, what does that mean to you? That means your portfolio, again, at $100,000, if you left it in the stock market, and according to the expectation of these fund managers, if it were to correct at that level, which I personally think it's going to, you're talking about 100,000 going down to 50 or 40,000. Now, at that point, you're going to just have to leave it in there, and you're going to be stuck. And depending on your age, that's probably not wise. That's why at these levels is such a perfect time to diversify yourself. Now, where we come to the United States, a lot of us, we're so American where we only really see American. We don't really care, for the most part, what's going on in the rest of the world and the economies. But the problem is it matters because we are a global economy, whether we really like it or not. China was the main leader in expansion of raw materials. It was really China, folks, since 2008 that kind of led the way through the economy the last 10 years. They built cities that nobody lives in. They built bridges that go nowhere. And think about the cities nobody lives in, what is detailed there, the copper and the concrete and the steel and so forth. They have expanded enormously. The problem is 10 years of expanding. We're in the largest expansion in U.S. history. There has to be a pause because, as some say, it hit peak economy. So what does that mean? That means if you've been in the markets, that's great. Hopefully you've made some decent returns since 2008. This is the time for protection and preservation. And to be protected and to be preserved, it means get it out of the paper world and into the physical, tangible world. You could be diversified, but physical, tangible, that's liquid and it's yours. And one way to do it, check this out and find out.
Terrorism, a volatile stock market, rising food costs, natural disasters. Every day our economy is at risk, but your assets should not be. Cornerstone Asset Metals is here to help you protect and preserve what you have worked so hard to gain. Whether you have IRAs to protect, 401ks to preserve, or cash in the bank, our accredited asset management specialists are here to support you. Call now and we'll send you urgent information regarding changes to the dollar and challenges to our economy that you need to be prepared for. Learn how easy it is to roll over your current IRA or 401k into a physical precious metals IRA. We can even arrange to have your precious metals stored in a private vault or send it directly to your home. Do not delay. Call 888-747-3309 or register online at cornerstoneassetmetals.com today. Invest in precious metals and create security in your future today. Call now.